this trade has been printing money for us. Literally, it's been printing money. 20 months in a row, we have won on this trade and only lost 1 week, one time. So we've put this trade on at least once every week in all market conditions for the last 20 months. That and so every last piece of growth that's been in this account has been organic, just straight out trading. I haven't put a cent into this account, which has been great. All right, so looking at the adjusting part though with this, if we have a trade on that's 4 days to go, and I'm going to tell you what's really cool about the 7DT course and the 1DT course is that we have a rhythm to the trade. We have a cadence to how we operate with the trade, that if you get the rhythm down, then it's going to really make everything else so much easier. Now it's like doing the two-step right here in Texas. If you learn just the basic two-step, then you can be like some of these people at these country bars that are they just look amazing doing the two-step, because they're able to take the basics, the rhythm of the trade, the cadence of the trade, and kind of enhance it. And so they look, you can see certain people say, oh, that person's a really good dancer, right? And you can see others and say, okay, well, that person's learning the rhythm, right? And that's just the way it is. And that's the same kind of concept with the trading. You have to understand the rhythm, the cadence of the trade first. So if you have on a trade, which is, let's say you had a trade on like this that was on the call side, and it was 10 points wide. And what the 7DT course teaches us is that we should do a defensive adjustment here. And the defense adjustment cadence says is that you're going to buy back the trade and move it to at least the tail end expected move. So let's just say this, it can be the 58.90 or the 58.95. Let's just say the 58.95 here. So I've moved it here. Now, this is saying down here, if you can't see, it's going to say $200. It's saying it's going to cost us $200 to buy back. Okay. And the rhythm or the cadence of the trade tells us that we can collect at least $100. We can count on or bank on at least $100 per contract on the non-tested side at the 15 delta. So without even going to check this non-tested side here, I know I need to do something else because I don't have enough, right? I only can get 100. This is costing 200. So I would immediately know that I need to add a contract. So let's say I highlight that on the TastyTrade platform, hit this quantity, add a contract. So now by adding that second contract, going from one contract to two contracts, I'm now getting a small credit to move to this 20 delta here. I will do the same thing to the non-tested side. I will add another contract. So now I know through the rhythm, through the cadence of this trade, I can get at least 200 on this non-tested side by rolling it up to the 15 delta. So because I can get 200 and I'm already getting a credit here, then what I should do is move it. I should move it away. That's the next step. That's the next step of the dance. I shouldn't stay at the 20. Maybe I move it to this 17. Right? So I'm going from a 39.40 delta to a 17. 17 is the lower yellow zone. That's going to cost about $80, right? 85 after fees and commissions. If I wanted to go to the 15, that's going to be 139. I'm going to get 200 on the other side at the 15. So in this example, I would just stay at the 7 here, the 17 here. And then that is the cadence, right? I went from one contract to two. If I started with one contract, that means I can use 5 contracts. So after this adjustment with 4 days ago, I still have 3 contracts left. Right? I still have 3 contracts left. In this example, and that 4 days is 2 days with weekend in between. So when I come back on Monday, I'm gonna have 1 DTE and I'm gonna be in a decent position, especially if I'm doing this type of adjustment at the end of the trading day. right? That's we talk about this all the time. We want to put the trade on at the end of the day if we can, and we want to adjust it during that witching hour if we can, because it allows us to better position ourselves for the next day. It's one of the frustrating things about trading is that if you have to adjust early in this trading session and then it changes later in this trading session to the point where you never had to adjust, then that's a frustrating, right? That's you want to try to wait as long as you can to let the market declare itself so that you can be able to position yourself as best you can going into the next day. And then if you have to adjust again, great. If you don't, then great as well. Right? Even better if you don't have to adjust again. So this is the cadence that you have to get down. We have a defensive adjustment cadence. We have an offensive adjustment, or what we call a proactive adjustment cadence. You have to learn it. And once you learn it and you're really good at it and you're not, it's not a memorization. You got it. You don't you it's second nature for you. Then you can start learning some of the deviations, some of the, sweeter points of doing the dance. Right? But do you need to have those, do you have to be an excellent dancer to be able to be super successful at this trade? No, but you do have to understand the basics of the dance at a high level. Hopefully this is kind of ringing with many of you on the call. This trade has been printing money for us. Literally, it's been printing money. 20 months in a row we have won on this trade and only lost 1 week, one time. So we've put this trade on at least once every week in all market conditions for the last 20 months. We're going on 2 years of being able to do this trade. Once we hit March, it's been 2 years of doing this trade the way we teach it now. Have we improved on it within that 2 years? Absolutely. Have we made it easier? I believe we have. Are we going to make it easier down the road? Well, we're definitely going to try, right? We're definitely going to try to continue to perfect this trade so that it's more and more like Fed type of printing money. We're never going to get to that point, but the goal is to continue to try to perfect the trade. And this has already been a huge success, and it's something that it's my second favorite trade now behind the bread and butter. And if it keeps this winning streak on, and it doesn't even have to keep the winning streak, it's just keep this ease of making money is definitely going to become a a 1A type of favorite trade for me. Here at the Dorian Trader, we do 7 primary type of strategies. We have the 0DT trade that Dr. Meadows was talking about a little earlier. We have the 1DT trade that we've been adjusting this morning. We have the 7DT trade, what I'm talking about right now. All awesome trades, in my opinion. Out of the short-term trades, this is the easiest one and the one you should start with, because if you can't make money with the 7DT trade, you're not going to be able to make money with the 1 or the 0. You have to be able to make money with this consistently, with this 7DT trade. We have the earnings plays. You guys know we struck out a little bit on that today, lost on both. That's the nature of it. We're still up over the last 2 weeks, which is great. And then we have our safeguard strategy. That is the strategy that we believe is better than buy and hold, that you can beat the market 99% of the time. Not that you're going to be up 99% of the time, but when the market is down, you'll be down less than the market. When the market is up, you'll be up at least equal to the market, if not better than the market. So that means you'll outperform the market over time. And then we have our long dated strategy. That 7th strategy is our long dated strategy that Ernie teaches us. He can't be on the call this morning. He's flying back to Laguna Beach. But our long dated strategy is a phenomenal strategy that Ernie teaches. It's selling a lot of naked puts super far out of the money, a year or more out, and selling some naked calls as well, but only in a strangle format. He will sell naked puts by themselves, but never a naked call by itself. If he sells a naked call, it's going to be attached to a naked put, which is technically a strangle type of strategy. You need to have portfolio margin to do that type of strategy best. So you need to have a bigger size account, at least if you're on the Thinkorswim, which Ernie trades that on. You need to have at least 125K to be able to initiate portfolio margin. Or if you're using TastyTrade, you're going to need to have 175,000 in your account to initiate that portfolio margin. So you're going to have a bigger size account, because selling those far out of the money puts and calls, the buying power is going to be significantly less, and it's going to give you awesome return on your capital. So some of the things that we do, you're going to need to have a bigger size account, right? Some of those 7 trades I just talked about, you're going to have a bigger size account. But most of them, you can have a small account, 5K, and do what we are teaching.